Yeah, no, I think so. I think what you're seeing is the expectation. Really, there'll be three drivers next year for oil prices, and it will really dictate which way prices go. Number one is the global economy. Will the economy grow? All expectations are, and it appears that the global economy is going to grow a couple percent. And it's kind of easy to do the math because then oil demand goes up a couple percent, and around 100, 101 million barrels a day. That's a couple million barrels a day of oil demand growth. So that'll help boost the price. OPEC Plus is another really important variable next year. And will OPEC Plus actually stick to its agreement in the first quarter? If it does, you're going to have an unusual first quarter oil market. And what I mean by that is you're going to have an undersupplied oil market. And typically the first quarter is an oversupplied oil market. So that will be a positive for oil prices. And then, of course, this geopolitical risk that's out there that you've been talking about, that's tragic in a lot of ways for a lot of people, but for the oil markets, it could result in a geopolitical risk premium. And frankly, in today's there's really no geopolitical risk premium in oil prices.
We just want to get into that a little bit more. There is quite a lot out there in terms of geopolitics. The Middle East conflicts put together with what's happening in the Red Sea, and then we have the Ukraine war. In terms of the impact of geopolitics and any potential supply disruption, has it been priced into the market?
We don't think so. So what we think is, oil probably should be around $80 a barrel just naturally. That's probably the break-even price right now globally to boost. And anything above will probably bring new production back. But when you look at where we are today, we're at 70. So theoretically, there's a negative geopolitical risk premium in the oil price potentially. But maybe said a different way, there's just no geopolitical risk premium built into the oil price right now, in our opinion. And so as a result of that, yeah, there probably should be, given all of the uncertainties. And so that's why we're a little more optimistic on a little bit higher oil prices for the year. $80 is still a price that can be good for the consumer globally, but also good for the producers as well.
Now, the first quarter historically is the lowest quarter for oil demand. As we look for demand growth this year, where is it going to come from? How strong will China be?
Yeah, so China's always the biggest factor. So the demand sources and the demand growth sources are kind of what they've been historically. So China leads the way, and it will be a large piece of the growth pie. The U.S. demand growth will be fairly substantial as well. And in the Middle East, Saudi Arabia will have some demand growth as well. So those will be the big demand growth stories, really. There's other parts of the world that have small pieces of that add up collectively to decent demand growth as well. But China will lead the way, and so that the impact of the Chinese economy obviously is felt across the world, and especially in the oil markets as well.